Right now, though, I want to bring in Walser Wealth Management President Rebecca Walser. And Rebecca, I want to start with corporations for a moment because households we know are really have had difficulty, right? They've been dealing with inflation. Their spending dollars don't go as far as they did. Now everyone's bracing for recessions. On the other hand, net non-financial corporations, net interest expense as a percentage of GDI has actually gone down. You know, so this has been a sweet spot for corporations, and maybe that means we could see a stock market that does well even as the economy starts to fall apart.
It's really unusual factors, Charles. I mean, we definitely have a mixed bag of goods. And I know that, CME Market Watch is basically projecting that we're going to have a cut in the next 6 months. But if you look at Dallas Fed President Logan, she basically is saying that there's still economic conditions that could indicate that we might have to continue to raise, interest rates. So I don't really think that the bond equation is as settled as Lance wants to say, because I don't think the Fed is one that we had that before, right? We had the market pushing for the Fed to cut, and the Fed didn't cut, and the Fed continued to raise. So I still have a problem with the market really believing what the Fed is going to do next, because I think that the economic, data that keeps coming in is really, it's bifurcated, and it's completely hodgepodge, and it's all over the map, and we don't have a clear direction top to bottom of where the economy is actually going. And so I disagree that everything is set in stone and we're on this path to a soft landing and everything's fine. So
talking about believing, and right, what about Janet Yellen, right? Because we saw what she said, that the Fed's going to go out there and put. And I don't think anyone really believes it, even though the market responded. Here we have some estimates. I mean, the kind of money that the Federal Reserve, the Treasury Department is looking to raise is right up there with the pandemic, right? I mean, this is a wartime budget, and people are concerned that's what's going to be driving yields, not even the Fed.
And that's the thing, Charles. Where are we going to? I just don't understand. Do people not understand that the balance sheet of the Fed is over $7 trillion? We're supposed to be quantitative tightening, and now we're coming out and saying we're going to be producing all of this new money that we have to have. Why are we having such high levels of printing in this? You can tell me it's Ukraine. You can tell me it's the Middle East. The world is on fire, Charles. We can't be the savior of it all, especially when we are in a net negative interest rate situation on a monthly basis to the Treasury from the Fed. Their balance sheet has got rates less than 2, and they're paying out over 4 in the reverse repos money market. So this is a huge problem, and the American public are saying, how are we going to get through with continuing to print our way out of this? Is not a solution. We're at the end of this print and forget it.
So to that point, Rebecca, Lance was talking about a traditional 60-40 portfolio. I think you're a little cautious on both stocks and bonds, though, right?
Yeah, I am believing that we're in the middle of a global financial transition. I actually see some really big, unfortunately, economic events coming before the end of the year. And so I'm really on the precious metals camp, commodities, GLD. That's my go-to right now for our clients. We just can't take the risk when we're a really goals-based planning firm with these clients that are retiring and just can't really see getting through this quagmire safely in these really risky speculative positions.
All right. Hey, Rebecca, always appreciate it. Thank you very much.
Thank you.